Okay, so I came across this. This is the Euro USD, but really looking at it, right? This is why I analyze the way I do, and I leave it on my chart so I can really see if the strategy that I've chosen really makes sense, right? We can look and see where we have what we're looking for is a 50 EMA. This is the 1 hour chart, by the way. 50 EMA and the pivot line crossover. They converge with one another. Price action touches on the blue line, which is the pivot, and that would trigger my entry. So, in other words, I would have a limit order wherever the blue line is. That's where I'm looking to enter. That's how my strategy is set up. Let me see if we can. So if I draw risk reward in for each one of these, you can kind of start to see how powerful the system is. And let's say that I'm aiming at, usually I'm aiming based on previous moves. So maybe this is price target 1, or maybe even this one. This is price target 1. Let me see if there's a way for me to do this actually. This will be kind of fly. If I can make it work. Put a big number 1 right here. Right? So this previous low is number 1. I'll do it just like this. That's number 1. This is price target number 2. And then this right here is going to be price target number 3. So each time I get into a position, I'm going to have to be aiming at 1, 2, or 3. It just depends. Okay, so for purposes of this illustration, I'll just run through this real quick, so you guys can get a feel for how I pick and analyze. So this is number 1. So number 1 would get a plus right here. Add an alert for not for the EMAs, just for the pair, right? Okay, so these are free charts. I need pro charts to do that. But what you want to do is have alerts. I'll have these orange lines signify. Let me make it a different color. I'm getting better at this, y'all. Y'all bear with me. So this pink line represents. Let's not do pink. Let's do a red line. Is the alert line. Can't use red either because we got that already. Dark blue. Dark blue is a price target. We'll just use that. Number 2 would be here. I'm sorry, H. So for y'all that use Tradingview, if you push Control A, or I'm sorry, Option H on your Mac, then you can drop a line in. Okay, so each time that I put a price target, it's going to be here. It's going to start here, alert here, and then it's going to go here to number 2, and then it's going to go all the way down to number 3. So I'm about to show y'all the profit potential on a move like this, where we have it trending downward and we see all these entries. This is another entry. This is the first time I've really dug into my strategy and how it's really set up. My stop is always just beyond the support. Since we're trending downwards, this is support. So this green line is support, the blue line is pivot point, and then the other green line is resistance. Let me see if I can make these a little bit brighter. There we go. So now you can really see those green lines. And that's how it's going to be. That's how I pick. And one of the ways that I used early on to really understand, I wonder if I can, yeah. Okay, so to really understand if we're in a good trend or not, is I look at the position, I look at the position of the bars, right? So the green, blue, green. And if it's inherently better than 1-to-1, so what that means is if I have this that I draw in, this is a 1-to-1 risk reward. And you can see that in the middle where the number is here, 1-to-1, because it's equal on the red side and on the green side. It's 100% equal. If there's some way that I can get into a position where these bars here are not evenly spaced and there's actually more reward than there is risk, then I do want to get in, because now we have a trend and it looks like I'm naturally going to do better than I'm going to do have my risk going forward, right? So I've said this in my other videos. 1-to-1 doesn't work for me. Even 2-to-1, I kind of turn my nose up to that too, because I've seen 3%, 4, 5, 6, and onwards on these moves. So I'm going to be looking for a bigger position most of the time. So I hope that makes sense. Let me go back to it one more time just so y'all can see. So inherently better 1-to-1, this right here, definitely. This one, not so much, but a little bit, barely. This one's pretty even. This was a big move because we had a big move here. And all this is, these bars are a signifier of the previous day's averages. So where the price went on average. Since there was a big move in price on the previous day, and it was mostly to the downside here, based on when the day started. So if I go back one, you'll see what I mean. Y'all bear with me, man. I know it. I just can't explain it as good as I'd like to yet. So this big move did not happen within yesterday, the previous day. The previous day starts right here, right where the bars first start forming horizontally. This is 4 p.m. and you can see that 1600 right there on the 30th. That's where the new trading day began. So most of what we saw happen was this pull up and then this drop down drastically, and then the next day formed. And when the next day formed, these bars are spaced based on the previous day's price averages, inherently better than 1-to-1, meaning that we're more likely to go on a downward move. MACD kind of told a similar story, whatever. And anyways, we're able to take that, and I'm going to show you how. So if I take this one, I'm going to point at 3 on all these, by the way, just so we're all on the same page here. And then we stop here. So I only put the risk reward spacer for one move, and then I stop once the next move begins so that we can see each one of them. It's a little trick I figured out. Okay, I see what I did here. This was like barely in there. Barely able to make that one happen. So now you're going to start to notice that the 3 makes the most sense for lots of these. As we get further and further down the sequence or whatnot, the first profit target and the second profit target don't really make sense for the second move and this third move, because it's so tight, it's so close to where we already are with the price action. So yes, we're going to choose for 3. On this one, it can go either way. So on this first move, I could probably stop at 1, but that's only 0.87, so I probably would go ahead and shoot for 2. 181. So let's be realistic and say that that's where we started. Boom, boom, boom. That's 3 positions down. The 4th position would look like this. And then we had a 5th, and then I took that one, and this is actually where the trend changed and went up. but I lost money right here. Just 1%, not a lot. Always only 1%. Risk managing, super important to risk management. Okay, so you're also going to notice that your profit potential begins to shrink as you get further and further down the combo. So this is why these early stage moves are super important. Um, Obviously, the first move has the most profit potential because we could drop all the way to 3. But realistically, I probably would not have seen the potential for it to really drop all the way down there before the move was really solidified, right? So if I say for 2, we're at 179. So I'm just going to count this up real quick so you guys can kind of see it. Let's see here. 179, 744. So we're at, well, let's just say 9% plus 5%, 14%, 15, almost 16, 17, 17% off of this move. This move spanned it from February 3rd until February 11th. So that's the power of this combo, this pyramid reversal strategy. And Infinite Prosperity teaches it, or at least they used to when Irek was there. And now Irek has his own class or whatnot. But I'm telling you, get those basics. Go take the Infinite Prosperity free course. Go update. I think it's like $400 to get all that information. By far, I shit you not, the best course that I've taken, the best course that I've come across on just the basics of Forex and really getting a strong handle. Anyways, just want to do that breakdown. This is the strategy that I started to use and kind of modified for myself. So I'm happy to teach you guys it. But I'm telling you, if you have that foundational knowledge, this is going to be a lot easier to grasp going in. So happy trading, and holler at me, hit me in the comment section if you guys got questions. Peace. Hey, greetings traders. Just wanted to drop a video after a couple of days away. Just wanted to kind of connect with everybody, talk a little bit about mindset and psychology of trading. There's a couple books that I recommend. I'm going to put them in the link in the description here. The Disciplined Trader by Mark Douglas, and also Trading for a Living by Mark Douglas as well. So those are two of my favorite books on the subject. Alchemy of Finance, but that's uh, kind of a mismatch or a mismatch of philosophy along with trading stuff. And it follows George Soros and kind of his story and his thoughts. But that's a little heavier. But I fell in love through that stuff. To be honest, man, I really like um, the aspects of discipline and the idea that you can kind of come up as a trader based on your mindset, based on how disciplined you are, how you're able to kind of take positions based on what you see on the charts versus how you feel inside, and letting emotions or recent wins, recent losses, that type of thing affect you too much. Um, with my online stuff, or I'm sorry, on screen video recordings where I'm going through the pairs, I want to start getting a little bit more in depth, kind of talking about potential targets. I've already been doing that, but really drilling down and saying, okay, this is a A trade or this is a B trade. I had a really good talk with a friend of mine yesterday, um, a trader here in Austin, who was saying he's been struggling with consistency. And, we all have at some point, and it's just part of the journey, obviously, right? Um, but one of the things he said, he doesn't, he's trying to figure out how to, sit and kind of write out his trading strategy, being able to present that to somebody, write it out on paper, explain it easily, quickly, and the whole 9 yards. So I'm doing that exercise with him. And one of the things he said is, I don't know if I'm saying, sometimes I do this way, the entry's based on this, and it's kind of subjective type of thing. Because that happens, especially when you're brand new. So one of the first things I kind of equated that to is no different than sports again. It's a baseball player being able to hit a 95 miles per hour or 100 mile per hour fastball. Before you can hit it, you got to be able to see it. And I think in trading, it's the same way. You want to practice and get really, really good, either through, well, mostly through back testing. Back testing is the truth, man. Anybody, the guy that I followed and got the most out of early was Irek Piekarski when it comes to like actually putting on trades and stuff. Um, and he was huge on back testing. I do remember that. So when I think about back testing and how important that could be for developing yourself, developing your confidence, and developing your strategy, that's a huge one. But what you do is you'll want to go and back test a strategy and be able to tell an A version of it uh, and an A plus version of it. So you want to get really tight into the intricacies of what makes this an A plus, what makes that an A, what makes it a B, what makes it an F setup, so that you don't even want to touch it, and have like concrete examples of those and understand the difference. That's the huge key. When I look at a chart, I can understand the difference between an okay setup and a really good setup. And then also the ones that stand out are the A pluses, and really knowing, hey, everything's lined up for me. I'm going to take this risk. Um, Still at 1%. Starting out, it needs to be just 1-to-1 ratios, or I'm sorry, one to whatever ratio. So I'm risking one to make two or three or four, or whatever your strategy usually um, can give you. And another piece right there, I just went over, understanding your risk metric and your average versus your better than average versus your stellar setups when it comes to risk reward. Um, a lot of the strategies I learned in Infinite Prosperity early, they talked about 1-to-1 being like, a good measure and a good consistent base hit type of trade over and over. And then they started calling like a 2-to-1 and a 3-to-1, 4-to-1, or like hyper moves, I think is what they call them. I don't know if it was a 2 or a 3-to-1 where they started calling it a hyper move, but essentially you're making 3 times as much as you're risking on that, right? Or 4 times more, or 5 times as much as you're risking, just depending on the setup. So I kind of want to go into depth on that whenever I'm on the charts, show you if I'm thinking it's um, a big move of 4-to-1, 5-to-1, or even better, which I've been there before when I'm trading this pyramid reversal strategy. And you're going to start seeing that link appear in the description for the pyramid reversal strategy. I'll put that out when I'm ready and confident in it. And it'll be like a little PDF for you to go look at my own strategy and say, okay, I understand how he's doing that. And you can follow it. It's not a secret, it's similar to the Lewis Markham method that's taught in Infinite Prosperity, and it's also similar to Irek's combo method. I don't know what he calls it nowadays. I think he changed it or named it something else in his newest course. But I haven't taken his newest course yet, so I don't know. But the strategy is the same. It's just refined, just tighter. I'm sure over time, like anything, you get better, tighter, more refined. It's kind of like, anything. The iPhone, the first one, was dope conceptually, and then they built off of it. Uh, According to some, they didn't build very much off of it, but you get what I'm saying. Anyways, so I just want to add the quality of saying, okay, whenever we have a profit target, we have multiple profit targets. Let's get into that. Um, let's get into price action dictating what we do when we exit, type of thing. Let's also go over stop loss and when we get out, because I like to cut my losses short. I don't wait for them to hit that full 1% loss most of the time. Um, and then, I need to develop on my own to have better entries. The only entry that I'm really, really confident in and love using is the pivot entry. I don't like live entries because I've found that that's a source of anxiety, and for me it's rough. So this is growing process, man. Like I said, I've blown my options account because I started playing and started playing big, and you know I really didn't learn the ropes as good as I probably needed to before going live there. I was really ready for Forex, but I didn't feel like my account was big enough to trade Forex. It was a mistake. And we all, as traders, make mistakes based around dollar amount and not necessarily the soundest decision uh, from a business standpoint sometimes. So, anyways, there's more to come. There's tons of that. And check out the links. Get that Tradingview, get that charting package. It's free. Go ahead and get linked up there. The description's there. Try out that Infinite Prosperity, those first couple courses at least, and then get a full membership when you can. They should have some kind of holiday special thing going on, but that course put me from a guy who understood what Forex was, but didn't really have a tight understanding of risk management or strategy or the reason why those strategies worked. And it kind of turned me into this guy who understood how to do that, how to back test, how to take high probability trades, how to only trade my setup. Um, I evolved because of that course, and I'm even on there. At the bottom, if you go to the landing page where you sign up, you go to the bottom, you're going to see Jordan Hill, and you're going to see my Facebook image where I'm in the trees or whatever in the redwoods in Cali. And you're going to see that it says that I leveled up through that. And I really did. And then Irek Piekarski's involvement, of course, just kind of took it to the next level. And now I'm teaching, um, because the last time I taught a guy who came and did my Wi-Fi when I moved here to Austin. And he saw my charts and asked me what I was doing. I told him I was trading. And he said he was interested but never got a chance to get started. I told him to come through. And he came for 3 months every Tuesday or Wednesday and Thursday. Yeah. And now he understands the setup. And through doing that, I got crystal clear on the pyramid reversal strategy. Is what I'm calling it right now. I might change the name. I don't know if I really like that, but that's what I do. I trade that strategy. And a lot of it was because of when I taught Joseph. So I just wanted to stay in that same vein. Y'all have a good weekend. I'll be back Monday with more videos. Peace.